why has it settled down so quickly and, in my opinion, very convincingly? For probably quite a few reasons. Once we have learned the lessons of the past crisis that we lived through worldwide and particularly in Europe, the framework of finance is much more elaborate. We have now a single supervision mechanism. That means that the European Central Bank monitors the largest banks in Europe. That's very credible. We have set up the ESM, which did not exist in the past. We have macroprudential policies that did not exist in the past. So, and we have a few agencies. So I think the architecture that we have built has helped us anticipate and is also deemed credible by markets, and that explains, I think, the resilience also of the financial sector.
But do you see any reasons for concern going forwards?
Well, I think someone who would say that there is no concern would not be credible. But let's face it, if you had told me a couple of weeks ago that we would have a stabilization on the markets so quickly, I would have signed immediately.
Yeah, so I was speaking to Pascal Donohoe, the head of the Eurogroup, and the question invariably that people ask out of this is what's going to happen with the banking union and whether the events in the last couple of weeks is actually going to engender real discussion on that third pillar, the deposit insurance guarantee scheme. To your mind, has it become a lot more necessary given the flare-ups we had and given that the catalyst, actually in the case of Credit Suisse, was the scale of deposit outflows?
I think we can learn a lot by what happened in the last couple of weeks. And that is that we need deposit insurance scheme, definitely at European level. We have it at the national level, but it is really absolutely necessary. Second, we realize that today a crisis can unwind in a couple of hours because of social media, because of internet. So we need to react fast. And this is the lesson I draw from it, is that we need to integrate that thought in the future of the banking union, and I encourage the Commission and the Member States to come forward with additional measures, and I think it's in the making. The Commission is working on it and will come up with a proposal quite soon.
Well, with the backdrop of all of this, you did mention you're relatively new to the role and you're managing director at ESM. You talked about some of the changes that you would like to introduce. There's obviously a lot of talk about the reform of the ESM as an institution, but one country is not so happy about it, and that is Italy, because they think if you do go down that route, it means that the likelihood of them being forced to restructure at some point in the future would be higher. What are you going to do to bring Italy on board?
Well, first and foremost, I am reinforcing the dialogue with Italy. Italy was around the table when the negotiation took place to strengthen the role of the ESM back in 2019-2020. I was at that time finance minister for Luxembourg, so I was part of those negotiations, and I think nobody doubts the fact that the revised treaty would be particularly useful when you have turbulences as we have witnessed them on financial markets right now, as the ESM will become the backstop of the Single Resolution Fund when there is this need. And this addition to our role will be helpful for all the countries. So I think a lot of explanations are necessary. At the same time, I keep on telling the Italian government that it's up to them, obviously, to convince their parliament, and it's a sovereign country, and unfortunately if Italy were not to ratify, it would block the other 19. So I count and I expect that Italy will there show solidarity with the others.
Are you confident it's going to pass ultimately?
Yes, I am confident. I'm a born optimistic. Fortunately, in this job, it's what you need.
Given you are born optimistic, I'm going to ask you a pessimistic question. Where do you think the biggest downside risk is? Because in your capacity in the ESM, obviously you're watching out for potential fires. Where do you think it could come from?
Well, there's potential risks out there because the hikes of interest rates were so fast. So it is always difficult when you have such dramatic changes in a short period of time to do adjustments. And sometimes we lose sight of the medium-term benefits. Let me take the example with higher interest rates. We reduce the vulnerabilities of high asset prices, which many people were criticizing. So we're not talking about that because we're now focused on the short term. So I think we need to give a little bit time to time, so and not lose sight on the medium term. So that's the optimistic view. The pessimistic view is that something I would not overlook is prices in real estate, both for private people and for commercial real estate, where we see a downward pressure both in the United States and in Europe. So that would be the one thing I would follow very closely.